Hi, this is Jeff Glenellis from Simple Forex System, and this is what I hope is going to be a rather quick video. It's more of a kind of an update on the Dual 50s. I put that one video up a few days back, and what I covered in that video was sort of the basics. What I want to do is kind of give you maybe an update or some alternatives or some additional ways to trade this, which so far from what I've been able to tell from going backwards is just incredibly powerful. And if you're like me and you're just a 10 pip scalper, uh, you are in for a treat, my friend. This is just something that I think I've noticed it in the past, but didn't pay a lot of attention to it. But now that I've really started studying it, it makes a lot more sense, and it's going to make a lot easier to find 10 pips during the day. For the people that have been in my trade room, know the last 5 or 6 trading days that we've had have just been awesome. Either we took no trades because we didn't get anything, by way of a decent setup. There just wasn't really any price activity, particularly yesterday morning during the New York session. And a lot of the other sessions, we got 20 pips in like 15 minutes and called it a session. It was just been some great trading. And I went back and counted. Actually, we won 21 out of the last 25 trades. That's not too shabby. In fact, very few people are ever. I've never been able to say that, to my knowledge. I don't think very many people can say it. This is, I think, the first time I've ever been able to say it. But this, by sticking to the what I would call maybe the prime or the gold standard trade using this setup, getting 10 is really becoming very, very easy. So let me just get into this real quickly. I know that your time is valuable. I'm going to try not to waste any more of it. What you're looking at is the basic trade setup that we're using right now. The colored lines, the dual lines that run through the middle of the platform, those are called the Dual 50s. This is the Hama. It's a Heikin-Ashi candles that are plotted along a moving average line. I believe it is the 26 or 28 moving average. I don't recall offhand, but somewhere in that range. Anyway, if you've got it, you just load it up. Don't worry about messing with the settings. This is the Forex Signal AM, and down here is the ever popular Renko MACD. And the idea here is you're looking for what I call the all systems are go trade. This would be the perfect setup or the best possible setup that you could ask for. And that would be when price breaks down, say for a sell trade, price breaks down below the lower band of the Dual 50s. And when that first candle closes below and the Dual 50s are red, as long as the Hama is red, the Signal AM is giving a sell signal, and the B band or the Renko MACD is giving a sell signal, by all means you sell. And in my case, I sell and try to go for 10 pips. And if you look over here, you're going to see that this morning there was a sell signal at about 2 something this morning. I don't remember the exact time. A little earlier than when I would prefer to trade. I think this thing works best between, about London Open and after lunch in New York. So from like 3 a.m. till 1 or 2 in the afternoon Eastern time. So this is a little earlier than I would trade. You got a sell signal. It did retrace, and normally if it goes back 1 candle, I'm out. Okay, I mean that's kind of like my rule on that. But I am looking to adjust that rule a little bit, and I'll go into that in more detail why in just a minute, because some of the things that we're discovering in using these setups. If you did hold on, ultimately you got to plus 10. You had to get past the pivot line. You always got to keep in mind where are you in relationship to pivot lines and resistance lines and support lines that are down here a little bit farther. And if you're sitting on top of a pivot line, this selling above the pivot is not generally considered a very wise idea, to be honest with you. The pivot line is there basically for price to pivot on and head the other direction, which actually it does. Price does clear that pivot line a little bit and ultimately turns around and heads up about, 60, 70 pips. But anyway, had you sold on the first candle that closed with a red, or in this case magenta Dual 50s, that would be this candle right here, it went down and got down to, plus 5 at one point, and ultimately it started moving up and all the signals began turning around. It was time to get out. You took a 10 or possibly even a 15 pip loss on that. really shouldn't take more than a 10 pip loss. If one candle closes in the wrong direction, you get out. And the worst case scenario on that is a 10 pip loss. The next signal came out here, and this was well after 3 o'clock in the morning, and the price broke above the upper band of the dual 50s. It's lime green, which is just as good as a blue line. I don't have the blue on here just because there's already so much blue. I wanted something to stand out. So it closes above the dual 50s. Your Hama, your Heikin-Ashi basically is blue. You've got a buy signal from the signal AM, and the Renko MACD is buy. It moves up. There's your 10 pips. Very easy. You had another breakdown through here later on in the day. This is around, I think, around 9:30 in the morning or so. Same thing. All systems are go. Sells all the way across the board. Easy 10 pips. You did have a break above the Heikin-Ashi here, but it never broke above the Hama, so you don't have anything to worry about there. But anyway, you had basically 3 signals, and during the course of about I don't know, 10 hours or so, 9 hours, and 2 of them were winners, which is great. If you can win 2 out of 3, you're going to make money, especially if you're doing a +10, -10 profit target and stop loss. But that's not what we're here to talk about. I know we just spent 7 minutes talking about it, but that's not what we're here to talk about. What I want you to notice on this chart, and this is a representative chart. This isn't cherry picked. This is today, okay? And you can go back to yesterday, the day before that. They're all going to look the same way. When price comes down and approaches the, in this case, if you're in a buy situation where price is above the dual 50s, when price comes down and touches the dual 50s and or the Hama, it always tends to bounce. Not always, most of the time it tends to bounce. But let's take a look at this. You had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Call that 10 because you have such a wide variation between the Hama and the dual 50s. 11, 12, 13, 14. You had 15 touches basically of the price coming back to touch on either the Hama or the dual 50s, or in some cases both, when they were in this area, for instance, where they're both basically plotted at the same point. Only 3 of them broke through and went into trades. The others bounced. And when they bounce, it has to move up 10 pips just to give you one opposite color candle, because you have the candle that closes down here, which is, a red candle. That candle, then, it's a 5 pip candle. It has to move up 5 pips basically just to give you sort of a doji looking mark on your chart, and then move up another 5 pips to give you the first blue candle. Well, there's your 10 pips. So if you don't want to sit here and wait all day, 3, 4, 5, 6 hours sometimes for price to break out above or below the dual 50s, giving you that great trade, that one that basically you're heavily favored to win, start watching for the bounces. And as soon as price closes on one of the lines, whether it's the upper band or the lower band, or the Hama, Heikin-Ashi Hama, same thing. Anytime you have a break there, start watching for the bounce, because the bounce itself could be worth an easy 10 to 15 pips. This one takes a lot of faith. Okay, it really does. I mean, you're basically saying price is moving in one direction, and I am now going to place a trade in the opposite direction of the current price momentum, and that is very, very tough to do, and some people just can't do it. But if you can overcome your fear and start trading that way, yes, you're going to lose some. They're going to go through, the wrong direction and break through the Hama, break through the dual 50s, and head off in the opposite direction. But the great thing is if you're buying at the bottom here and it breaks through here, that's only about a 5 pip loss. Whereas if you were, this is your entry. Your entry is not up at the top here. Its entry is down here below at the bottom of the candle. In the case of a, if you're buying for a bounce, and so when price moves the wrong way, you're only looking at 5, 6, 7, 8 pips in terms of a loss. Much more preferable than than taking a straight up 10 pip loss every time. But think of it, there were 15 approaches and only 3 of them really broke through, which means you'd have 12 winners for 10 pips, 120 pips, and 3 that broke through, and you're going to lose 7 to 10 pips each time. 120 minus 30 is 90 based on my lousy public math school skills, and that's a good score in anybody's book. So anyway, I just wanted to bring that up to you and show you that that is another option, something for you to consider. So when you do get one last thing too is when you do get the breakthrough, the odds are good. You now have a signal going in the opposite direction. So if you just dumped 7 to 10 pips on a losing trade, you now have the ability to get into another trade going in the opposite direction, probably with full indicator support and a chance to get those 10 pips right back. And if that's the case, then basically you're back at break even and ready to trade again. So anyway, this is a sweet little system. It's if you put it up on your charts, you're going to be able to go back as far as your charts allow you, and you're going to see that these are some awesome awesome trading opportunities, maybe that you have not seen before. Yes, you are trading against a lot of your indicators, and in some cases, if you're trading a buy off of a sell candle, a lot of your indicators are already telling you to sell. Well, so be it. But one thing you can do to minimize, some of your risk is watch the HAMA, and if the HAMA stays blue, play the bounces. If the HAMA starts to turn red, don't play the bounces off that, because you're actually getting strong absolute sell signals down through here. So you can skip possibly 1 or 2 of these losing trades if you've got more or less complete support of the indicators. You might play the bounce here and lose it and hold off, but as you get closer to the bounce here, you notice, hey, everything's going red, so you just hold off until you get the strong signal, and then you sell, and you get all your money back. So anyway, I hope that makes sense. You guys know how to reach me, Jeff at simpleforexsystem.net. If there's any questions or comments, or you need any clarification, I'll be happy to give it to you. And if you don't have this system yet, everything is up on the download page, including all these new indicators that we're using and have been testing and have proven to be such solid workhorse indicators for us with the Renko bars. So you can just visit simpleforexsystem.net, pick up your own copy, and you're good to go. Anyway, it's getting near the end of the year. I'm taking a couple of weeks off. I may do some more videos if anything kind of occurs to me that I think we need to cover. But I don't plan on trading again until after Christmas. I hope everybody has a wonderful Christmas holiday and a great new year. And I look forward to speaking to you guys once we get up and rolling after the first of the year. So good luck with this, and hopefully talk to all of you after the first of the year. Bye-bye.